Welcome back to the Daily Market Podcast. You know, we love to really get into the nitty-gritty of the market.
Yeah, absolutely.
So today's deep dive is all about the Indian financial market as it stands on December 3rd, 2024.
Yeah?
We've got a ton of reports, analyses, tons of data to unpack.
Sounds good.
And you know what? It's actually pretty exciting stuff.
All right, I'm ready.
Think of it like we're exploring a treasure map.
Yeah.
And each piece of data is like a clue leading us to, what's really happening in the market.
Oh, I like that. I like that analogy a lot.
Yeah.
We're on a quest for financial knowledge.
Exactly. And today's quest is particularly interesting because on the surface, the market seems to be booming, but there are these whispers of potential trouble beneath the surface.
Interesting. Yeah, I like where you're going with this.
So we've got major market gains, but also these rumors of tax changes, and they could really impact specific companies, and even a blue chip darling that's taken a hit but might still be overpriced.
Okay, so where do we start unpacking all this data?
Well, let's start with the big picture. The Sensex closed at 820 order couple 8.08, and the Nifty at 24276.05, both showing significant gains.
Yeah, those are big numbers.
Yeah, and over 250 stocks hit one-year highs, and investors earned nearly 4 lakh crore in a single day.
Okay, so definitely cause for celebration.
Yeah, are you feeling the excitement?
I am, but as you said, there are some potential storm clouds on the horizon.
Right.
The Sensex and Nifty are important indicators reflecting the overall health of the Indian stock market, but they don't always tell the whole story.
Right. For example, there's been this buzz about potential hike in the goods and services tax, or GST.
Yeah.
And that news has hit certain companies hard.
For sure.
We saw Varun Beverages, ITC, Godfrey Phillips, and VST Industries all experience a dip in share prices today.
Yeah, makes sense.
Varun Beverages in particular fell by 5.18%.
Whoa, that's a pretty significant drop.
Yeah.
So a GST hike could mean higher prices for consumers, which could lead to lower demand. And ultimately, that impacts these companies' profitability.
Right.
It's interesting, though, the varying impact across these companies.
Yeah.
I mean, they all operate within the consumer goods sector, but their product mix and pricing strategies are different, which explains why some are more vulnerable than others to a potential GST hike.
This makes sense.
Yeah.
It's like some companies have built sturdier umbrellas for this potential storm.
Exactly. It highlights how important it is to look beyond the headlines and understand the nuances of each company's situation.
Absolutely.
Yeah.
Now let's move on to a bit of a puzzle in the blue chip world. Asian Paints, often considered, a safe and reliable investment. It's down 30% from its highs.
Yeah.
But some analysts are saying it's still overpriced.
This is where things get really interesting. Okay, so Asian Paints has a solid reputation. They've got that strong brand recognition. But even the most reliable companies can face headwinds.
Yeah.
In Asian Paints' case, we're seeing rising input costs and potentially, slowing demand in certain segments.
But why would some analysts still think it's overpriced? Isn't a 30% drop already significant?
It is, but here's the thing. Valuations aren't just about past performance.
Okay.
They also consider future growth prospects and the company's overall financial health.
Okay.
In Asian Paint's case, some analysts might be looking at, metrics like the price-to-earnings ratio or PE ratio and seeing that even after the drop, it's still high compared to historical levels or industry averages.
Okay, so it's like saying, even though the house is on sale, it might still be too expensive for what it offers.
Exactly.
Yeah.
It's all about assessing the true value of the company based on a multitude of factors, not just the current stock price.
Okay, now shifting gears to the world of initial public offerings, or IPOs.
Right.
We're seeing a bit of a slowdown in subscriptions over the last couple of months.
Interesting.
Some analysts are pointing to weak market sentiment and a few, disappointing listing performances as the culprits.
This is a trend worth watching closely. A successful IPO depends not just on the company's fundamentals, but also on investor confidence and overall market conditions.
Right.
When the market feels uncertain, investors tend to get a little skittish, even if the company going public has a great story.
And we've seen a